So, welcome everyone, and thank you for sparing your time today to understand GHG accounting of Scope 3 emissions. Ladies and gentlemen, we thank you for gracing our webinar. Thank you for gracing our webinar centered around the GHG accounting of Scope 3 emissions according to Greenhouse Gas Protocol. I, Raji Banka, am your host, and I'm truly honored to guide you through the wealth of insights that await us throughout the webinar. As we embark on today's session, I assure you that our discussions are poised to be nothing short of enlightening. With the expertise of our esteemed speakers, Mr. Karunakar Avuram, a seasoned sustainability professional with 18 years of experience, specializing in environmental sustainability, energy efficiency, carbon mitigation, waste management, CSR, and ESG disclosures, is an expert advisor for ESG services at A2G. Our next speaker, Mr. Hussain Parpia, who has 12 years of experience in environmental management and sustainability, ISO 14001, EMS lead auditor, ISO 14064, GHG lead verifier, CII certified professional in carbon footprint. And our last speaker, Mr. Rishabh Singh, is a sustainability consultant at AA Garg and Co., specializing in ESG reporting, strategy implementation, climate risk management, net zero corporate sustainability, and circular economy, with extensive project management experience in government projects across India, gracing us with the experience presence. Together, we shall glean insights into the dynamic realm of GHG accounting and unlock the latest dimensions within it. I urge you to embrace this opportunity to its fullest extent. Now, let's dive into the agenda for today's discussion. These are GHG accounting scope 3, overview of GHG emissions and various scopes, methodology and computation approaches, case study, our approach for scope 3 emissions and common challenges and learnings, Q&A session with A to G ESG expert. After the presentation, we'll have a Q&A session where you can ask any question you may have. Further, I request your kind attention to the meeting rules. The meeting will be recorded. The meeting shall be based on champion rules. That is, only the discussions will be recorded without attributing to the speakers. Q&A session shall be taken in the last. Kindly restrict the discussion to the mentioned topic. Note that all attendees are on mute. For any queries, please use the raise hand feature. The moderator shall unmute and allowed to speak in the Q&A round. Kindly introduce yourself and your organization briefly and ask your question. In view of time limitations, we would request all to avoid repetitive questions. Lastly, you may also please keep entering your queries in the chat box and we shall get back to you. Thank you, everyone. I shall invite now Ipsita Roy to take the lead.
Thank you, Prachi, for this wonderful introduction. So, as we set forth today's discussion on GHG accounting of Scope 3 emissions, I first of all request Mr. Hussain to initiate with the introduction of greenhouse gases.
Good afternoon, everyone. Before we dive into the topic of today's webinar, let's briefly explore what greenhouse gases are and what greenhouse emissions are. As you can see in the image on your right, a greenhouse is a glass building in which plants that need protection from cold weather are grown. The Earth's atmosphere, in the presence of certain gases, trap heat from the sun, much like the glass panels of a greenhouse. This earthly phenomenon is known as the greenhouse effect and is essential for maintaining the Earth's temperature at levels conducive to life. The gases in the Earth's atmosphere, such as carbon dioxide, that trap heat and warm the planet, are known as greenhouse gases. It is important to note here that the emissions of these greenhouse gases can result from both natural and human activities, such as release of carbon dioxide from volcanoes or combustion of fossil fuels. Also, although the greenhouse gases are essential for maintaining the Earth's temperature, These emissions are actually attributed as a major cause of climate change. Next slide, please. Let's take a brief moment to explore the Greenhouse Gas Protocol. The Greenhouse Gas Protocol standards is the most widely used framework to measure, manage, and report greenhouse gas emissions. It was developed by the World Resources Institute and the World Business Council on Sustainable Development. It offers a consistent framework for businesses and governments to assess the environmental impact and take meaningful steps towards sustainability and climate action. As you can see in the image below, in addition to carbon dioxide, the Greenhouse Gas Protocol covers 6 other gases. It also categorizes greenhouse gases into 3 scopes, Scope 1, Scope 2, Scope 3, to comprehensively enable organizations to address the full emissions profile. Next slide, please. Now let's take an overview of the greenhouse gas scopes. Scope 1 encompasses emissions directly controlled by the company, such as those from on-site combustion or production processes. Scope 2 involves indirect emissions from purchase of electricity or steam. Scope 3 widens the perspective, also the topic of today's webinar, and it includes all the indirect emissions throughout the value chain, like transportation or product use. Understanding and addressing emissions across these scopes are essential for a comprehensive sustainability strategy. Next slide, please. Now let's take a look at the concept of organizational boundaries. It involves 3 consolidation approaches across the Scope 1, Scope 2, Scope 3 inventories, which the organization can choose from. The first option, the operational control approach, accounting for emissions where the reporting company has operational control. The second, the financial control approach, accounting for emissions where the reporting company has financial control. Lastly, we have the equity share approach, where emissions are accounted in proportion to the equity of the reporting company. What's important to note here is that the consolidation approach chosen from the 3 approaches I've just mentioned must be consistent across Scope 1, Scope 2, and Scope 3 inventories. Next slide, please.
Thank you, Hussain, for your insights. Now, I would like to request Mr. Karunakar Avaram to take the lead and explain us the importance of Scope 3.
Thanks, Hipsta. Thanks, Hussain. So as we understand, Scope 3 emissions are called indirect emissions. So initially, the focus has been on Scope 1 and Scope 2 emissions, but now we see an increased demand for accounting and reporting Scope 3 emissions as well. There are various reasons, there are various drivers as well. Mostly the regulatory requirements are going up globally. And if you look at from Indian context, we know that SEBI has come out with a mandate to top 1,000 companies to report BRSR. And one of the requirements of BRSR is to report on Scope 3 emissions. And we also see an increased number of companies taking aggressive targets like science-based targets or net zero emission targets. And for that also you need to inventorize Scope 3 emissions and report. And some of the companies have also started reporting on CDP. CDP also requires reporting on Scope 3 emissions. Now, many companies, after achieving certain level of maturity, they have started focusing on their value chain partners. And if you have to assess your value chain partner, you need to understand Scope 3 emissions as well, where to focus on. Now, there are certain risks and there are certain opportunities. Now, some companies have started inventorizing and reporting Scope 3 emissions to avoid risks, and some companies are trying to gain capture the opportunities by reporting Scope 3 emissions. Now, on the right, if you look at the graph shows the intensity of Scope 3 emissions compared with the Scope 1 and Scope 2 emissions. So on an average, the Scope 3 emissions are 11 times higher than Scope 1 and Scope 2 emissions. And we can imagine the magnitude of Scope 3 emissions. So that means if you look at the overall emissions, Scope 3 emissions contributes to more than 90% of the overall emissions. Next slide, please. So there are various categories within Scope 3. There are 15 categories within Scope 3. If you look at the table here, from purchased goods and services till upstream leased assets, the first 8 categories are put into upstream scope 3 emissions, and from ninth one, downstream transport and distribution till investments. These 7 categories are put under downstream scope 3 emissions. So let's look at each one of them in brief. Go to the next slide. Here, the first one is purchased goods and services. Now, purchased goods means the purchased raw materials, packaging materials, and any consumable that a company procures. And purchase services means, for example, any IT services. Typically, a manufacturing company uses third-party IT services for their operations. So that's a purchase services. Now, what is to be accounted under category 1 is basically the emissions, the value chain emissions associated with the purchased goods. Like if you look at purchased goods, the emissions right from extraction of raw materials till the gate of your immediate supplier, that from till the gate of your tier 1 suppliers. So these emissions are categorized under category 1, that's purchased goods and services. Now, category 2 is very similar to purchased goods, but here the capital goods are accounted. While under category 1, it's related to raw materials and packaging material consumables. Category 2 focuses on capital goods. Here also the emissions right from the extraction of materials till the gate of your supplier ought to be accounted under category 2. Now, category 3 is an important category. One thing you have to note here. We know that the fuel consumption, fuel and energy related emissions have 2 types of emissions. For example, if you have a boiler or a DG set, the fuel consumed in your boiler or DG set emits emissions. That is combustion related emissions. So that is accounted under scope 1 emissions. But these fuels, be it coal or diesel, have value chain emissions also, right from the extraction of mineral till it reaches your factory gate. So these are the value chain emissions that are to be accounted under category 3, that is scope 3 emissions. Similarly, the electricity consumed in your factory is accounted under scope 2 emissions. But there is a scope 3 also, value chain emissions, that upstream emissions of the electricity purchased and the transmission and distribution losses are also accounted under category 3 of scope 3 emissions. Now, the fourth one is related to upstream transport and distribution. Now, there are 3 subcategories within this. The transportation of raw materials, that means whatever is reported under category 1, purchased goods, the transportation of purchased goods from your immediate supplier, that is from your tier 1 supplier till your factory gate, comes under upstream transportation. Now, the second category in this is the transportation of finished goods. Now, it appears to be downstream, but if a company pays for the transportation of its finished good transport, then it is also put under transportation, because here the company is purchasing services, purchases the logistics services. Therefore, it is included under upstream. The third item is the transportation between companies' own facilities is also included under upstream transportation. Now, the distribution is nothing but in case during the transportation of your raw materials or finished goods, if you store it in a warehouse, that is also included under this category. Now, the fifth one is waste generated in your own operations. Now, typically, you will have hazardous waste, non-hazardous waste generated in your operations, and that has to be disposed according to the rules. And each method of disposal has its own emissions. So those emissions are to be accounted under category 5. Now, category 6 is about the business travel. Now, employees do travel for various business activities, either by air or rail or road. So the emissions from business travel are to be accounted under category 6. Now, category 7 is about employee commuting. That is for daily commuting of employees from their home to factory and factory to home, are to be accounted under category 7. Could be either by 2-wheelers or 4-wheelers or public transport. Now, category 8 is related to upstream leased assets. What it means is, if a company is using any leased machine, or if they have an office in a leased asset, so that is to be included under category 8. For example, if you have an office in a rental space, so the emissions are typically from the energy consumption of the building. So that has to be accounted under category 8. Next slide, please. So category 9 is downstream transportation. This is essentially the transportation of finished goods for which the company doesn't pay. That is from its factory gate till it reaches consumer. part of, in case if company pays for the transportation, then it is included under category 4. Otherwise, it is category 9. Now, category 10 is processing of sold goods. In case if a company is involved in manufacturing of any intermediate goods, for example, a chemical company, or I can take the example of cement factory. Cement factory, typically limestone is converted into cement, but there is an intermediate product called clinker. Sometimes the cement companies sell their clinker to another company where it is further processed into cement. So in such cases, the emissions from the downstream processing is included under category 10. Category 11 is use of sold products, and this is more applicable for appliances industry. For example, if you are manufacturing air conditioning unit, since it's a summer, it's more applicable. And this AC would consume energy during use phase at your customer or consumer, right? And it results in emissions. So those emissions from the use phase of such equipment are to be accounted under category 11. Now, category 12 is about the end of life treatment of sold products. For example, if you take any electronic gadget, for example, mobile phone, after using it for 4 or 5 years, and that mobile phone would be disposed. Now, what happens after end of life? So for each method of disposal has certain emissions. So those emissions are to be accounted under category 12. Now, category 13 deals with the downstream leased assets. For example, if a company leased out its assets to another company, so the emissions from that leased assets are to be reported under category 13. Category 14 is related to franchises. If a company has any franchises, and the emissions, if they are not included within the scope 1 and scope 2 boundary, they are to be reported under scope 3, that is category 14 of scope 3. Investments, if a company has any investments in another company, the emissions equivalent to equity share of that particular company are to be reported under this company's category 15. So these are the 15 categories of scope 3. Let us also look at the broad approach in determining the scope 3 emissions. Now, there are two types of data, primary data and secondary data. Primary data essentially means you collect data from your value chain partners. The secondary data is, in case primary data is not available, then you source publicly available data. That is, industry average data base are available. And the two most widely used databases are, one is UK-based DEFRA emission database. The other one is US EPA database. So these are the two widely used databases by the corporates across the globe. There are other databases also, for example, EcoInvent or Gabi Lifecycle database, but these are not available free. Well, UK DEFRA and US EPA database are available in free. Now, if you look at the purchased goods category, there are four methods to determine. One is supplier specific method. Now, this is more accurate method because here you would collect the supplier specific information. All the upstream emissions data is collected from your value chain partner. But the problem is very time consuming and very cumbersome exercise. The second alternate method is hybrid method. In this, if your value chain partners have some level of data, you take that what is available with your value chain partners, and what is not available is sourced from publicly available resources. That's a hybrid method. And if no supplier specific data is available, then you go with the average data method or spend based method. Now these two, the average data method and spend based method, these two are based on the publicly available resources. The only difference is, for average data method, you need to know the quantity of purchased goods, quantity in terms of metric tons, and the emission factor per ton of the product. Whereas in spend-based method, you calculate based on the value of products, value of purchased goods, and the emission factor in terms of per dollar or per euro of the good. That's a difference. And for upstream, downstream, and distribution, and for downstream also the method is same. And there are three approaches: either a fuel-based method. Here, if you know the fuel consumption for transportation, then you can take the fuel consumption and multiply with the fuel emission factor. But again, here also there's a challenge to get the fuel. The alternate approach is distance-based, where you need to get the quantity of goods transported in metric tons and the distance traveled If you have these two, so then you can multiply with the distance-based emission factor to get the emissions. The other approach is spend-based method, where you take the value of the transportation. Now, for waste generation category, here again, you need to know the quantity of waste generated and the method of disposal. Based on these two, you can calculate the emissions from waste generation. For business travel, again, the mode of travel, the distance traveled by employee. Based on this, you can calculate business travel. And for employee commute, again, the mode of travel, total distance traveled by the employees, and by multiplying the relevant emission factor, you can calculate employee commute emissions. For upstream leased assets, there are again different methods. Asset specific, for example, let's take the case of the leased office space. And if you know the energy consumption of your office, you can take that particular energy consumption and multiply with the emission factor. In case the particular office space energy is not monitored, but the overall building energy is monitored, then you can apportion it to your office space and calculate. That is a lesser specific method. If none of that is available, then you can go with the average data-based method. There are certain databases available where you get the energy consumption, average energy consumption per activity of a building. Similarly, for processed sold goods also, the more appropriate method is site-specific method, where you get the amount of fuel consumed, amount of electricity consumed for processing of the sold good. If that is not available, you can go with the average database method, that is, which is available in public domain. Now, for end of life treatment also, it's very similar. You need to get the quantity of material, quantity of products sold, and what is the typical method of disposal, which can be obtained from, again, publicly available literature. So these are the various data sources. We have not mentioned all categories, but we have mentioned major categories here in terms of the approach to calculate emissions. Yeah.
Thank you, Mr. Karunakar. Now we would like to take you all through a case study wherein we will be explaining about the Scope 3 emissions. To give an introduction about the client and the overview, I would like to invite Mr. Hussain.
Hi, let's take a look at the much awaited case study we promised. And this is the overview of the client. Our esteemed client for this case study is one of India's largest listed company producing flexible packaging and packaging films. The client has revenues in excess of 14,000 crores and 11 manufacturing plants across India. The objectives are as such: 1. Scope 3 emissions GHG accounting and value chain assessment. 2. Compliance with business responsibility and sustainability reporting. 3. Net zero target setting, science-based targets initiative alignment, process support and sign-off. 4. Carbon disclosure project and Dow Jones Sustainability Index rating, preparedness and submission. Next slide, please. The project stages are as follows. 1. Relevant and significant Scope 3 categories identification. 2. Peer benchmarking. 3. Final selection of Scope 3 categories. 4. Stakeholder alignment and data collection. 5. Selection of approach and computation of Scope 3 GHG emissions. And lastly, reporting and disclosures. Next slide, please.
Thank you, Hussain, for giving a brief intro. And now I would like to invite Mr. Rishabh to take us all through in detail.
Thanks a lot, Siddharth. So let us look at each of the steps involved in the GHG accounting process for the client with which we did this project. So initially what we did was we did a trial calculation of all the GHG emissions for all the possible categories in Scope 3 on spend-based method. The reason behind this was that spend-based method is quite easy. The data required for this method is readily available because it is based on the cost that we have incurred for procurement. And it gives them rough idea about estimation of what are the emission hotspots. For example, which are the categories which are most emission intensive and which we need to focus upon. So as you can see in the table below, there are 11 categories in total in which we calculated the Scope 3 emissions based on the spend-based method or the average data method in case in some of the categories, the spend-based method is not applicable. So you can see the purchase goods and services. It is a major contributor to Scope 3 emissions for the client because the firm is into manufacturing and we, as we know, for manufacturing firms, the purchase goods and services contribute to the most of the emissions. So the total emissions of all the categories that we calculated were around 21 lakh metric ton of CO2 equivalent. And based on these calculations, we got an idea about what coverage we need to have of the different categories and which are the categories that are most relevant for our consideration. Going forward. So the next step in GHG accounting, we did peer benchmarking. So this exercise we conducted to identify what are the peers in this particular industry are doing, which are the scope 3 categories that they are reporting on, what are their emissions in different categories within scope 3. So we identified 3 different firms. 2 of these firms were the peers of the particular of a client, and one we took was an industry leader in the international market. So that was an international client which is not operating in India, but we needed to benchmark with the international standard as well. So we took that client also for peer benchmarking. This selection for criteria of these 3 were based on the same industry, which is quite obvious. Then it should have a similar geographic footprint and the similar size as our client. And there's a second step regarding data pooling. So data pooling we did from the sustainability report and or the ESG reports of these firms, since this data is publicly available and reliable. The third step was to identify the emission hotspots for these particular firms, which categories they are reporting on in the scope 3 and which are contributing to their major emissions. So as you can see in the table below, based on our analysis, we identified 6 categories, 4 of them upstream and 2 downstream categories, which were which were reported by all the 3 firms. And you can see the scope 3 emissions percentage based on the total scope 3 emissions for each of the category. So in line with what we had calculated based on for our client based on the spend-based method, the purchase goods and services again proved to be the major contributor as these firms are into manufacturing. So this gave us an idea like what categories that we need to report on. Moving forward. So for the final selection of categories, we had 2 criteria. First was that we, based on the spend-based method, what emission hotspot categories we had identified. Second, what the peers were reporting upon. So we took both these criteria into consideration and we took the client input also. So they had some priorities also. So based on that, we finalized 9 categories on which we did the GHG accounting. As you can see, these 9 categories are mentioned here. The 8 are the upstream categories, which are purchase goods and services, fuel and energy, capital goods, upstream transportation and distribution, waste generated in operation, business travel, employee commute, and upstream leased assets. These were the 8 upstream categories that we took for GHG accounting, and 1 downstream category that was downstream transportation and distribution. The method of computation of GHG emissions for each of this category that we adopted is also mentioned. For example, for purchase goods and services, we adopted the average data method and the spend-based method, as mentioned earlier also. For fuel and energy, we use the average data method. For upstream transportation and distribution, we use the distance-based method. So these are the different method of computation that we adopted for each of these categories. And the scope 3 contribution of each of these categories in percentage is also mentioned here. So you can see that some categories like business travel and employee commute, though not contributing much to the emissions, but we took these categories because we thought that these were low hanging fruits and mostly comparatively easy to compute compared to purchase goods and services and capital goods. So these were the 9 categories that we finalized for GHG accounting. So now let us discuss 3 of these categories, which are major emission contributors, that is purchase goods and services, fuels and energy, and upstream transportation and distribution that we'll discuss in detail. So let us first discuss category 1, that is purchase goods and services. So the approach and data collection is the most important criteria for computation of GHG emissions. So we analyze the supplier specific and hybrid method in the first phase because these are the most specific methods of computation and most accurate. So we did a ESG materiality assessment for our suppliers. So we gave them a survey and we conducted some interaction or some stakeholder consultation webinars with them to identify what was their ESG maturity. So you can see the numbers here. So there was large number of ESG, large number of suppliers. There were, and majority of these, a major portion of these suppliers were MSMEs. And there were 13% of exports also. So there were some foreign firms also, which were suppliers. Mostly they were Chinese firms. So, but we assessed that the ESG maturity of these firms were quite low because majority of these firms were not reporting on their GHG emissions. And for supplier specific, you need the scope 1, scope 2, and scope 3 emissions of a supplier. And for hybrid also, we need at least the scope 1 and scope 2 data of our suppliers. So hence we decided to go with the average data method for our computation, and wherever there was average data method was preferable. In case the activity based emission factor was not available for some items, then we went for the spend based method. So average data method and spend based method were the two methods that we finally adopted. So our client had around 16 manufacturing units. So we pulled out the data from each of the 16 units regarding purchase goods and services, and we took the data from the corporate office also, in which there was a considerable amount of services along with goods. So the total goods and services accounted to around 17,000, and we categorized this goods based on the emission factor. So it came out to be around, the category of goods came out to be around 164. The emission factors that we used for this category is from DEFRA for average based method, and for spend based method we used the emission factor from US EPA, that is US Environmental Protection Agency. Moving forward. Yes. So just look at one of the examples that we used just to depict how we did the computation of these GHG emissions. The first was that we identified where we can go for the activity-based emission factors were available. We went for the average data method, and for the rest we went for the spend-based method. And we analyzed for each of the categories what is the emission intensity based on the emissions per unit of weight or an emissions per unit of rupee. I mean the cost that is spent for the procurement of these goods. So this is just one of the samples that we have taken for our computation. So you can see these are the different types of goods that are being procured by the firm. The method that we have used for the computation of GHG emission. For example, for polypropylene polymers, we have used the average data method. For solvent, we have used the spend-based method. Since reliable emission factors regarding these was not available in the free available sources of DEFRA and US EPA, because solvent consists of many different types of materials and they have different composition of various components. So this is the approach that we adopted. And based on this, we did an analysis of the emission intensity of the goods and where we can improve for substitution and other efficiency methods. Moving forward. Yes. So this is just to show one basic calculation. If someone is new to GHG emission or scope 3, a basic calculation of how the emissions are being calculated. So the first step is to find the activity data. So if you have purchase goods and services, see what are the procurement you have in that list, find out what is the activity. What is activity in the sense, say, suppose there is one material, so what is the weight of that material? So for example, we have taken the PP polymers. So in this case, the weight is around 25,000 metric ton. This is the activity. And now we have to find the emission factors. So we have fetched the emission factors from DEFRA. The emission factors for PP polymers as per DEFRA is around 3,090 CO2 equivalent of per metric ton. So the emission factor is in CO2 equivalent per metric ton. So it encompasses all the 7 GHG gases. If it is so, we can directly multiply the activity data with the emission factor, and we will get the total tons of emission that has occurred. That is, which is roughly 76,600 around. So these are the tons of emission. The multiplication will result into kg CO2, but we have converted into tons by a factor of 1,000. So the next steps we took after computation is to identify which are the most emission intensive procurements that we have in our entire supply chain. We compare these emissions with other substitutable products, whether there are some opportunities where we can substitute some of the products which have lower emissions. And based on this, we suggested the client for some improvements in their product design or sourcing methodologies, or we suggested them to have some supplier engagement as well. Moving forward. So let us look at one of the second category, that is fuel and energy. So in this scope 3, we take the cradle to gate emissions of of fuels and energy that we have purchased. So cradle to gate means the emissions that have occurred from the extraction of the particular raw materials from that to where it comes to your site. All the emissions included in all the process in between, from extraction to refining to manufacturing to transportation till it reaches your factory to your unit. So that is the meaning of cradle to gate. So here cradle to gate can be also be called as embodied emissions for simplification. So we had in our scope fuels, electricity, and transmission and distribution losses. So fuels, normally our client had PNG, heavy fuel oil, diesel, petroleum, coke, etc. And for electricity, the most of the electricity was procured from the local discoms. And for this, the emission factors that we used were DEFRA for fuels and electricity. In DEFRA, if you refer to the database of DEFRA, there is WTT emission factor. WTT means well to tank. So as I mentioned, this emission factor encompasses all the emission that has occurred since the extraction of that particular raw materials to its from that point to the point it reaches to your factory location. And for the transmission distribution losses, we use the World Bank data in which there is country specific losses mentioned, T&D losses data mentioned for each country. Although this is also this is also given in DEFRA also, but DEFRA is a UK based database, so the T&D losses are more relevant to the UK. So we took the World Bank database because that in that we found that India specific T&D losses were given. So just a basic calculation as we seen in the last category also. So activity data in this case for computation of GHG emission due to electricity would be, let's say we have around 1500 gigawatt hours of electricity consumption. The emission factors, again, we have to consult DEFRA in the case, which comes to be about 0.0459. And then multiplying these activity data with the emission factors, we will get the total tons of emissions. I mean, we'll get in kg CO2 equivalent, but you can divide by 100 to get into the tons. So it comes out to be 67,932 tons of CO2 emissions. Moving forward. Yes. So the next category that we will take up is upstream transportation and distribution. So upstream transportation and distribution encompasses all your upstream procurement that you have done. So transportation of those goods from the supplier to your particular location wherever you are based. So for example, suppose for our client there is one good that is plastic granules. So suppose our client has imported sourced 17 tons of plastic granules from location A of the supplier to its particular location B where its manufacturing unit is located, and these two locations are 500 kilometers apart. So in this case, the mode of transportation that we have to identify, it could be road, rail, air, or sea. In most of the imports case, it is mostly sea. In some cases, it might be air also. And for the distance, what we have used is we calculated distance from the online calculators that are readily available. For local distances, we can get it from internet, normal Google internet database also. And for the sea travel, we can have the port-to-port distance. So there are some websites or some databases where you can get the port-to-port distances also. For the emission factors, we use the DEFRA emission factors for freighting goods. So there is one database specified for freighting goods where you can find the relative emission factors. One important consideration in this is that apart from the mode of the transport, the emission factors will also vary upon the transport vehicle. So suppose in road transportation, there could be transportation through rigid high goods vehicle, or it could be through articulated lorry or some other vehicle. So based on that, the emission factors will vary, and the same emission factors have been given in DEFRA as well. Similarly, for sea, it could be a bulk carrier, it could be a container ship, or any other mode of transports like oil tanker or whatever it might be. Similar, so accordingly, we can take the emission factors from the DEFRA, which are readily available. So again, to just show one demo calculation for a basic idea. For in this case, the activity data that we have to see is based on tons kilometer. So emission factors in DEFRA for distance-based method are in tons kilometer or in kilometers. So for tons kilometer, we will see what is the amount of good that has been transported and what is the distance through which it has been transported. So here in our example, we have seen the 17 metric tons of plastic granules that has been transported at a distance of 500 kilometers. So the emission activity data that comes out to be is 17 into 500, that is 8,500 tons kilometer of activity data. So now we have to find the emission factors, which is 0.125 as per DEFRA, and we multiply the activity data, that is 8,500 tons kilometer, into the emission factor. We will get a total of around 1,500 kg CO2 equivalent of emissions. So this is one basic calculation which we wanted to show. The next steps that we took after this calculation of GHG emission was that identifying what are the inefficiencies in delivery routes, whether we can optimize some of the delivery routes, whether we can use some fuel efficient transportation. We also interacted with some of our suppliers because there was many of the items have been supplied by the suppliers. The transportation is in their scope. So we asked them for improving their transportation practices, using of more efficient vehicles, and we also coordinated with some of the logistic partners to better this to reduce the emissions in this particular category. Moving forward. So these are the three categories that we briefly discussed. We had calculated emissions for all the other categories, but in paucity of time, it won't be possible to discuss all the categories in detail. So concluding, we will discuss about some of the common challenges that we faced in GHG accounting. So first is the reliance on value chain partners. As we discussed earlier also, for very specific methods, we need a lot of data from the supply chain partners. And if the supplier's maturity is not up to the mark, then they won't be having their scope 1, scope 2, scope 3 data. I mean, they won't be calculating their GHG emissions. The second challenge was that availability and quality of the data. So as you can imagine, for a large firm, there would be thousands and thousands of data points that you will need to collect for each category, and especially for purchase goods and services and capital goods for a manufacturing firm. So calculating the availability of these data is a bit challenge. It would be difficult if there is a proper ERP system is not available, then availability of these data is difficult from the client, and they won't be able to fetch the 100% of the data. Also, the quality of the data in terms of units with regard to available emission factors based on the activity data may not be available. Suppose the units of particular goods are in square meter, rolls, or etc. But the emission factors in free sources like DEFRA and USCP might be in tons or some other volumetric activity factors. So that is one challenge. The third would be allocation of emissions. So suppose in transportation, upstream transportation and distribution, if your supplier is supplying one truckload of good to multiple customers. So in one truckload, he is supplying goods to multiple customers. So in that cases, the allocation of emissions is little tricky on part of the supplier. The fourth challenge would be that availability of local databases. As you have seen earlier, we have used USEP and DEFRA databases, but these are UK and US specific databases. But there are not many reliable local databases of India or Asia which are freely available. So that is one challenge. And these challenges basically lead to broader use of secondary data. And as we know that secondary data is not that accurate if we compare it to primary data. But due to these challenges, sometimes we are forced to use the secondary data, and which results into some assumptions that we need to take while GHG accounting and some modeling that we need to do specific to the client or the situations that we have because of unavailability of certain data or unavailability of free emission factors that are available in the public domain. So these are some of the challenges. Now moving forward, I would like to hand over to Sita to please take it forward. Thank you, everyone. Thanks a lot. Ipsita, I think you can take over.
It's okay, we can move on. Here in this slide, we have a standard transformation journey, including 8 generic steps a business goes through for ESG implementation. First, we have ESG decision making, which entails analyzing business environment, assessing pros and cons, building sustainability business case. Number 2, we have stakeholder engagement and materiality, which includes assessing material topics, engaging key stakeholders, and aligning long-term objectives. Thirdly, we have ESG baseline and gap assessment, including evaluation of performance gaps. Fourth, we have ESG goals and targets involving defining ambitions and stakeholder expectations, also setting of clear goals. Number 5, we have goal roadmap and implementation, which entails establishing governance structures and integrating ESG criteria. Number 6, we have performance management and monitoring, which includes developing a strategic approach and setting ambitious targets. Number 7, we have ESG business integration, which involves integrating sustainability across functions, creating value for business and society. Number 8, we have ESG external reporting, which involves disclosing sustainability information and reporting on ESG and financial value. Next slide, please. Now I would like to highlight the solutions that we offer in our ESG portfolio. Number 1, ESG leadership advisory and strategy. Number 2, materiality assessment and stakeholder engagement. Number 3, ESG baseline assessment. Number 4, climate risk mitigation goals and initiatives. Number 5, performance management and governance. Number 6, external reporting and ratings. This includes end-to-end reporting and advisory on reporting frameworks such as BRSR, GRI, integrated reporting, IFRS, TCFD, and carbon disclosure project. Also, I would like to highlight here our ethos that guide these solutions. Firstly, our mantra, which is think beyond, innovate, and simplify. Secondly, to deliver exceptional value to the clients and in turn build long-term relationships. Thirdly, we live and abide by the concept of creating shared value, which means doing well by doing good. And lastly, and most importantly, integrity stands as a paramount virtue. We firmly believe and strive to ensure these ethos drive each of our products and services and solutions, and that we deliver value for our clients. Next slide, please.
Thank you, Hussain. Thank you, everyone. In the interest of time and yes, so I hope that every one of you did enjoy the presentation today and got an opportunity to seek some knowledge on Scope 3 emissions. Thank you everyone for attending.